Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I'd like to talk about what new investors can do with as little as $100, as well as talk about the investing mentality for new investors. This comes in response to a number of viewer comments asking what they should invest on Robinhood, starting off with little capital, as well as a few viewer comments as this one here, asking should they put $100 into lottery tickets or $100 into Robinhood to invest. So I'd like to start off by talking about the investment potential with Robinhood, with any investment, to be quite honest. So if you're expecting double or tripling your money within a few days, I don't think Robinhood is going to provide you that kind of return. Yes, you can invest in penny stocks and make a big return in a short amount of time, but that's essentially gambling. That's not going to be maintained or sustained over the long term. So the mentality of jumping onto Robinhood should be a long-term perspective, 5, 10 years down the road. So going back to that previously referenced comment, about putting $100 into lottery tickets or $100 into Robinhood. Yeah, lottery tickets will give you a better short-term return potentially, but over the long term you'll lose your money. Robinhood will give you a little bit slower rate of return, but over the long term you'll make a very, very good return. And by good return, I'm talking about maybe 5 to 10% per year starting off. If you get lucky and have very good investments, 10 to 20% would be expected, but anything over that is simply not going to be maintained or reproduced year after year. 5 to 10% is a very reasonable rate of return. 10 to 15%, even 15 to 20%, yes, you can do that over a number of years, but I think over the long term, you should be shooting for that 5 to 10% range. So, I've already talked about penny stocks. I would avoid those. Yes, you can make some money over the short term, and if you want to play around with those and have some fun, that would be quite all right. But if you're expecting to invest in penny stocks, that is simply not going to happen. Penny stocks are essentially gambling with the stock market. Yes, you can make a little bit of a return, but if you want a true investment, you should invest in stocks for the long term. So what can investors jump into? So if you want to go back to my other videos, take a look at those videos for individual stocks, but I think for any new investor, jumping into an exchange traded fund or ETF would be the reasonable approach. And I have a few of those up here. These are simply a collection of stocks that follow an underlying index. The stocks I have here are following S&P 500 high dividend companies. And the beauty behind these stocks is that you get instant diversification in investing in these ETFs or stocks. Each of these ETFs has an underlying investment portfolio of 50 to 100 and sometimes 150 different stocks. So you get some protection with regards to diversification, and they got a great dividend yield as well. And they're very large investment portfolios as well. So you can see this one here, 17.26 billion, number of these, and they're very low cost as well. So you can buy, for example, this DVY stock here, ETF for 91.50, but you get an underlying portfolio of essentially 100 stocks. You can see on the bottom there, this is tracking an index, a dividend-weighted index of U.S. companies, an index selecting roughly 100 stocks based on dividend yield over a broad market cap universe. So you get diversification there, you get good stocks, and you get a lot of different stocks for only $91.50. This one here, SCHD 4469, you can see on the bottom here, again, tracking an index, a market cap weighted index of 100 dividend-paying U.S. equities. SDY, a similar fashion, tracking at least 50 dividend-paying companies over at least a 20-year period of dividend increases. So dividend aristocrats, essentially. And one that I think would be an excellent choice for new investors is this one here, an SPHD. That also is tracking a dividend yield-weighted index of 50 of the highest yielding companies on the S&P 500, as well as 50 of the lowest volatility companies. And the nice part about this particular ETF is it gives a monthly dividend, which is nice for new investors to kind of see a return on their investment without having to wait on a period of time, 3 months for a quarterly dividend. They can kind of see upfront their dividends coming in on a monthly basis. So I think this would be a great dividend for any new investor. It's only $39.93. So for $100, you can buy a couple shares of this, maybe a couple of shares of Ford, for example, to get some experience buying and selling individual securities. So that's what I would do for all new investors. Again, check out my other videos that have more individual stocks, $50, $100, $500, and $1,000 new investor videos. But for any new investor getting onto Robinhood, I think the expectation should be about a 5 to 10% yearly return on your money, on your investment. I would avoid anything that would be higher than that. Penny stocks. If you do want to get into some penny stocks to learn how to buy and sell individual securities, that's a different thing. But if you are expecting to get into penny stocks to make a very good return over the long term, that's simply not going to happen.